RwandAir has been central to Rwanda's development strategy, linking key growth sectors from logistics to tourism. Welcome to Game Changers. I'm Tabitha Muthoni, and today I'm having a sit down with Fouad Caunhye, who is the Chief Commercial Officer of RwandAir, to help us unpack the airline's game-changing plans, from new routes, innovative travel products that they have in place, and also a bold vision that is shaping the future of air travel in Rwanda. You know, we say from Kigali to the world, this is a journey that you do not want to miss. Fouad, thank you very much for your time. So, quite interesting times for RwandAir, I can say, but let us start off by looking at the key competitive advantages that Rwanda offers compared to other East African hubs such as, Nairobi or Addis Ababa.
Good afternoon, Tabitha. Pleased to meet you. And you would have to kind of take a step back, right, and understand the landscape, the geography that we occupy here in Rwanda, RwandAir within Rwanda, and the landscape that applies to all of us competitors within Africa. RwandAir has very, very similar growing pains as any other African airlines. What makes the difference is whoever has been able to build a little bit, even a fractional bit of competitive advantage in the past, is actually post-COVID enjoying those benefits. We have been lucky in many ways. We've occupied space, we have had a stable fleet, and then we have operated within a region where growth has been if not, very exponential, but at least very regular. So to answer your question very simply, we are on a logic of growth. There are green shoots, out of the market, out of the post-COVID market, and we have every intention of consolidating further and building a bit more on the previous advantages, even if they are very slim, but on the previous advantages that we had built.
How do these new routes fit into Rwanda's broader strategy for tourism and trade? And also let us expand a little bit and look at the kind of passengers that you intend to maybe attract with these new routes, looking at also the cargo volumes at the same time.
Correct. We always had, Tabitha, a multi-segment logic. VFR from West Africa connecting into Europe, into the Middle East, into Asia. Our relationship with Qatar Airways, the very, very important strategically critical code share deal that we have with them that connects us to another 300 origin and destination city pairs, globally, with Doha as a gateway or a passage point. And this is where you see Mombasa and Zanzibar fitting in. So from that diversity of segments, the corporate segment, within our own area or backyard, into East and Southern Africa and up to the Middle East, the VFR segment, the business demand, that comes across. There has always been, but we're giving it a new push with Mombasa and Zanzibar, which is to accommodate a bit more of the tour operator, the leisure segments. So the more regular, not necessarily the higher yielding ones, but more year-round, more regular tour operator business from our European online as well as interline point of sales. I'm talking of online as the UK, France, Belgium obviously, but also Germany, Italy, Switzerland, Scandinavia. That is those points that are becoming quite relevant and quite important to RwandAir. So Mombasa, Zanzibar, sun, sea, massive value for money tourism, attracting some of the bigger groups now, as you know, Hilton, Sheraton, Marriott, just to name a few. Quite a plethora of them.
How many flights do you expect to have in a day?
So obviously, again, we're looking at what our fleet can deliver. We are starting on a per week basis with 4 flights on Mombasa and Zanzibar each. But the idea is to provide better or a wider spread of demand points. So when you're looking at Mombasa, will not be the first point we're operating in Kenya. We operate into Nairobi. So Mombasa is a complement to Nairobi, where we then work with other partners, of which local airlines in Kenya Airways, for instance, our good friends to the east, to provide that Mombasa-Nairobi connectivity, eventually, where we can take passengers to both gateway points through Kigali. Similarly, into Tanzania, with Dar es Salaam and Kilimanjaro, providing other extraction points besides Zanzibar, where a tourist, for instance, a safari goer, whether it is in the Serengeti or in the Mara, can operate with local partners who are also our partners, round or circle trip points, enter Zanzibar, exit Kilimanjaro, enter Dar es Salaam, exit Mombasa, for instance, seamlessly. So we're not only looking at growing RwandAir, we're also looking at growing partnerships, joint business, commercial relationships with other operators, in the region.
So RwandAir has consistently, emphasized balancing connectivity, profitability, and also customer value. Let us speak into how you're managing this balance in a highly competitive African aviation market.
Tabitha, we know our space. We're not the biggest airline in Africa. We're not the biggest player in Africa. But we do think that there is space for everybody, and even more so for African players. Look at it this way, right? I mean, there is about $15 to $17 billion, of air ticket value, if you want, or air ticket spend per year, available in Africa. Out of which you would say about, a good 5 or 6 billion, obtains, within Africa, itself. And some markets have very developed, domestic markets of their own. I'm thinking of Nigeria, South Africa, Kenya itself, and so on. Now, that leaves us with another 10 or 15 billion dollars worth of air ticket value or ticket spend. We are not the luckiest one on this front. We, to the difference of many other airlines, we don't have the value of a massive domestic market to support, our Pan-African and international ambitions. So a lot of that, or a massive part or chunk of that future war chest can only be developed, on international flights or very long haul flights. Now, this is where things get a bit more sensitive. The longer you fly, irrespective of the fare, the longer you fly, the less money you make. So the shorter you fly is where the value of that revenue is the highest. We call it, our yield, literally, or our revenue per seat per kilometer. So we are not the most favored. Now, having said that, and this is where the strategic logic, that is put in place, under the leadership of our CEO, Mrs. Makolo, her team, the executive, and so on, is to look at RwandAir first plugging in as the sovereign arm, if you want, of a country with regards to maintain that first lane connectivity alive. That is, we are enclave, we are in the middle of Central Africa, we need routes. For us, flights is similar as a land route or a road, if you want. So keeping that alive is critical. And this is where the first revenue bank, if you want, is made up. Nairobi, Entebbe, Dar es Salaam, the capitals, or the main cities, commercial cities on the East African mainland. continuing a bit further, then we looking at West Africa, you know, Cameroon, for instance, Gabon, you know, Nigeria, and again the main commercial cities or capitals of these routes and areas. To be able to accompany this growth or that movement, you need a fleet. You need a good, reliable fleet, and this is where we face our secondary challenges: the availability of aircraft on the world market, ready availability of spares at the right price on the world markets, etc. And we are again in that logic where, you know. Post-COVID, you know, with all the constrictions that have happened, would require another 6 to 8 years, you know, for the main manufacturers. Some are faster, others are a bit slower. Main manufacturers to get back up to speed. The trajectory maintains is that we are lucky to see that in those markets that we operate in, growth green shoots are presenting themselves, are regular, and moving forward. We actually would like to have had planes like yesterday in order to make that happen better. We're looking, for instance, at long-haul points like Mumbai in India, Guangzhou in China, you know, as part of our 5-year development plan in year 2, year 3. We're looking at other points as well, you know, where we would be looking at consolidating, you know, the use of wide-body aircraft, which we don't have enough at the moment. Additional flights, you know, on points where we already operate, for instance, Paris. New flights on points where we are not operating yet, but where demand can be featured further. That would be Germany, that would be Italy, that could be, you know, Scandinavia, other points, or Central Europe as well. Obviously, everything we do has at the back of our mind, you know, we are very, very, you know, ecologically conscious operator, like the country, like our beautiful city of Kigali, like the country itself, and all our main stakeholders. Everything, you know, any route decision we make is also rationalized by the way of that balancing of revenues against emissions consumptions. And if the ratio doesn't support it, no, we won't do it.
Thank you very much for your time and also great insights. Quite a lot to see.
It's been a pleasure, Ms. Tabitha. Thank you so much for the hospitality.
Thank you very much to our audience for watching this episode of Game Changers. You have been with me, Tabitha Muthoni. Keep it CNBC Africa, first in business worldwide.